Welcome to Investors Insights. Our topic today is Let Patience Be Your Power. We chose that topic with all the volatility that's going on, and as we enter in towards the end of the fourth quarter of 2018, we find sometimes that people try to take it and use it like a football game with the clock ticking versus saying long-term strategies versus short-term moments. Yes. And Bobby, you brought up some great points in our meeting about all the good things that are going on despite the volatility in the market. Talk about that.
Yeah, we recognize that the impact that the volatility that we've had this year, especially the past couple months, has had on investor confidence. But it is important in a time like this to maintain the longer-term plan. Again, it's not good to react strongly to the wild swings we've seen the past couple weeks. Look, every extended bull market has wild swings, has volatility. This is not normal for this to be going on. Look, no guarantees, but we are still in a good environment for stocks.
Absolutely.
Consumer confidence and spending is strong, high single-digit earnings growth, still historically low interest rates, 2.5% to 3% GDP. Again, third quarter GDP was 3.5%. That's a strong number. Yeah. Increased dividend growth, corporate buybacks are strong. And then also above trend manufacturing growth. 72% of industries are growing, not just stagnant, but are growing in our economy. That's a good number.
Well, and you say corporate buybacks. Buyback means the company has extra money, excess cash, and they think buying their stock is the best investment they can make with that.
Yeah. So again, if you look at all these factors, and I just listed a few, we're still in what we think is a good environment for stocks.
Yeah, and then Ashley, you stepped in there and talked about other additional factors that are very positive.
Exactly. A lot of this headline risk on tariffs and trade has been out there that's kind of beating on the market, but what you don't see underneath that, we just are signing this week a major positive trade agreement with South Korea. It's not the size of China, but it's a major market.
Right.
And where that's going to help us most is in auto production in the United States. The South Koreans relaxed that. And so that's a huge industry for employment and multiplier effect. So you don't see a lot of those things right below the surface that are going on doing great.
Right. And then
it's clearly been the headlines. The last week of November was a phenomenal week. We had two headwinds that we perceived as holding the market back, and they were. Market shot up 3+% in the last week of November, largely due to positive news out of the trade talks with China and the U.S. Then last week, a few tweets here, a few press releases there out of China. Market gives back those gains and then some. No new fundamental news. GDP data didn't come out disappointed. Came out was great. Unemployment last week ended the week very, very strong. A couple words on trade data. We're down 4%.
Yeah.
So it's clearly the market is extremely emotional about a few topics and is completely ignoring a lot of the fundamental positives. Like you said, maybe between now and the end of the year, there's not that much time to clear all this out, but the clock doesn't stop there.
No, it doesn't stop.
The sun comes up January 1st.
Absolutely. And so everybody needs to understand that as we approach year-end and go into 2019. And then the other thing is look at the United States in relation to the rest of the world. So Adam, you talked from a global standpoint on what was going on out there.
Yeah, definitely. We keep talking about market volatility inside the U.S. It's easy to focus on the domestic standpoint, we all look at our own markets. We think we're the only struggle. There's a global weakness out there. We found out that the U.K. may delay the Brexit deal.
Right.
There's an 18-month low on the sterling right now. Wow. So you're seeing an instant struggle from rumors like that come out. You're looking at the Asian markets, too. They're down off of China. Their data didn't come back like they thought it would. It missed expectations. So you're seeing it across the board right now. And also you talk about China, with their purchases on agriculture going into soybean production. When's that immediate purchase?
Right.
Is it at the end of the year? Is it tomorrow? Or is it at the end of the 90 days?
Right.
Yeah,
everyone's definition of immediate clearly is different.
Yeah, and then talk about import-exports right quick.
For the very first time in 70 years, and we've been tracking that on the vlog, very first time in 70 years, last week we exported more oil than we imported, which is great for the United States long term. And what we were talking about is that all of the energy policy for those 70 years was more Washington out. The latest change has been, look, take the deregulation off the producers and let them go get it. Let the free enterprise system work. Magically, then it gets solved.
Right.
So we need more of that.
Right. So on that note, we hope you have a great week. There's volatility in the market, but let's look at the facts. Let's take a deep breath. Let's have patience be our power, as we said. And we're going to keep you updated as we approach year end. Thanks for watching. Thanks for forwarding this to colleagues and friends. And we look forward to keeping you updated as we approach the fourth quarter end of 2018.